We're looking at the first quarter of 2021, how the economy has fared. Dr. Biodo Adedipe, of course, is here with us. Good morning, Dr. Adedipe. Good to see you, and happy Easter to you.
Thank you so very much.
Good morning, sir. You're
Good
welcome.
morning.
Happy Easter to you.
I wish you the same.
Well, we have seen the sudden exit from recession surprised everyone, including the World Bank, right? And now, although we have seen some economic proxies decline, all right, so we've just finished the first quarter 2021, and we have entered the second quarter. How would you describe the first quarter?
All right, thank you so very much for that. Let me start from the premise that exiting recession for Nigeria was not a surprise to me. And the reason is very simple. When you look at the data of our GDP, as at September 2020, our GDP figure for the first 3 quarters of 2020 was about 75.04% of the GDP figure for 2019. So we saw then that the economy was moving at the same pace as it did in 2019. So we knew also that if we finished 2020, the likelihood was that there would be a very tiny, growth rate, which of course, no matter how little, it will take you out of recession, which was what happened. And we, of course, had mentioned this. Now, if you look at first quarter this year, there's a peculiarity to the Nigerian economy, which oftentimes people didn't take into account in the discourse. And that's the fact that the informal sector is a big number in our economy. And oftentimes, the activities happening there are not fully captured in the data we measure and interpret. So now, and that sector also, because of its nature, is where the impact of COVID-19 is not fully felt.
Oh, yeah.
Okay? So, and you can see that anywhere you go in Nigeria, on the roads, a lot of people still move around without their face mask. Okay? People don't maintain social distancing in contact-intensive economic activities. So when you look at all of this, it tells you that, look, the informal sector was still running business as usual. So if you look at that now and come to the organized private sector, which oftentimes is represented by the stock market, which of course we say is a barometer for the state of the economy. So by the time you take those two, you get a good picture of what happened in the first quarter. Now the GDP, the stock market in Nigeria, the index, grew by about 6% in the first quarter. So that tells you that as a lead indicator of what will happen to the economy, we should expect some modest growth in the first quarter of this year. In fact, from our own perspective, in our own interpretation of what is happening in Nigeria, what we see as likely to happen for first quarter this year will be close to what the World Bank is projecting for the entire year. So let me leave it there. We can then talk about it.
All right. Now, the IMF World Bank spring meeting, of course, is starting off today. And, usually in the way they practice it there, the IMF is likely to review its global economic outlook and perhaps may move that forward for Nigeria, considering certain macroeconomic parameters. Now, this is notwithstanding some of the analysts having expressed some kind of apprehension about the first quarter, even though you are not. Now their fears are based on the less than flattening. I mean, we just saw the FBN Quest PMI, which is currently at 51.4. That's from 53.
Right.
In March. So what's your view about a flatlining of GDP and the possible need for an additional, fiscal stimulus like practice in other advanced economies?
Yeah, really, the situation where we are now, the recovery is weak. That's the reality. And what that tells you is that the concern should be more about stimulating economic activities, which means the government must still look for resources to stimulate the economy, either in terms of direct fiscal stimulus or indirect by way of certain concessions and maybe incentives that are not monetary in nature. So what this means essentially is that you want to drive economic activities, but you must also ensure that this time around, the stimulus is well targeted. Yes, we did well in 2020 responding to the state of the economy, but targeting means you look at the economy, look at the fact that the informal sector is big, and then look at the fact that a large number of your people are at the bottom of the pyramid, which means the focus in terms of getting this economy growing strongly and inclusively should be at the bottom of the pyramid. So, and what happens there? You find that mostly in terms of the financial sector, for example, it is microfinance banks that intervene there. They do more of intervention there. So in which case, there should be more attention in stimulating activities in the microfinance sector. That's on the one hand. Now, I mean, looking at about 40 million customers that those banks have. Yes, there are many in number. We have 40 million customers at the bottom of your pyramid. Is a good number to work with in terms of intervention. That's on one side. Now, the other side to it is that there's a need to also expand the revenue base of the government. Oftentimes we talk about, oh, tax evasion, this and that, but the reality is that we don't address tax issues the way we should. Now, I was a part of an international tax conference in the last 2 months, and one of the major issues happening internationally is that governments are not looking at putting so much pressure on individuals and corporate entities that are already in the tax net. The focus is how do we attract those that are outside the net to come into it. That is the most effective way of expanding revenue. So when people become worried, like you said, about what we expect to happen to our GDP and then the trajectory of that for the rest of the year, they look at our external debt, they look at domestic debt, they look at the burden of that in terms of servicing and repayment, and then they look at government revenue and say, if we compare these two, revenue vis-a-vis debt obligations is very high. And so we then make the argument that this appears unsustainable. So where did everything starts is, one, how do we expand the tax net on the one hand? Two, how do we introduce incentives that will make corporates and individuals be more willing to pay taxes and levies instead of pursuing them and making it appear that I think I should rather close down this business.
Well, I want to take
continue.
I want to take it up from there, Dr. Adedipe. Last week we were talking to Mr. Rwani on this issue of taxation, for corporates in particular, and he talked about tax for asset conversion.
That's right.
Where you have some of these companies who perhaps pay a lot of taxes, and of course, when these taxes are paid, we don't really get the value for it. Now, what about having these companies converted to infrastructure development?
Precisely.
So some of those taxes go into infrastructure, which we can see, which
Because
can actually be monitored and be accounted for.
Even people not paying the taxes because they are skeptical about what is being used for.
Absolutely.
They are not seeing the effect. So
Absolutely.
this would even make it, more appreciated, and then
So
perhaps
do you think that's a good way to actually go?
I agree with that totally. We call it social compact. And what that means is that I pay taxes, levies, and dues to government. In return, government does something I can relate with. So now, the way it works is that if a company is evaluated to have a tax liability, let's say of 1 billion naira for the sake of discussion, and now the particular road leading to the factory, or let's say that manufacturer, requires about 600 million to fix. That is without all the fat that is normally in contracts in Nigeria, okay? So now, cut away the fat, 600 million will deliver the road. Now, if that company steps forward and makes an offer to government, let's fix this road, you define the engineering specifications and standards, we comply with that fully, and of course, you have your inspectors also confirm that anyway. So instead of paying 600 million naira in cash to the treasury, we will deliver this road. We pay 400 million. So in which case, we do the road, you give us tax credit, and we set that off our tax liability. We see a lot more infrastructure delivered in Nigeria, especially by the OPS, that's the organized private sector. They will do a lot of that. Of course, we do this informally also. Estates where we live and the rest of it, we contribute money and fix roads. And of course, even
we don't
electricity.
connect it to the government. We are not seeing,
We do that, like social responsibility, so to say. In our estates, communities, we contribute money. We buy transformers, electricity transformers, and the rest of them. Of course, unfortunately, the discos come over once this, inaugurated, they take
becomes
ownership.
theirs.
Okay, but of course we do all this to ensure things work. So I believe it's a way of converting what is due as tax into tangible public assets. Which interestingly also, as I always say, that's why I always emphasize spending on roads. When government spend on roads, good quality roads, it's an investment that comes back to government also as our revenue. And how? The more activities that take place because we spend less time commuting, the more value we create for individual companies, and the more tax we pay to the government. And that's the relationship between them all. So we therefore will see investment in roads as actually investment in inclusive growth of the economy. That's the way it goes.
Well, talking about inclusive, when you mentioned 14 million people, you know,
Yes,
in the
clients
informal
of,
sector,
microfinance.
I'm thinking, is there no way to have a more inclusive economy? When we talk, whether we talk about tax or we talk about, you know, being able to forecast. I mean, even the World Bank couldn't really get, you know, the forecast because of the high number we have in the informal sector.
That's right.
Is there no way that these people can be incorporated into the formal economy so that we can have a better planning, you know, better projection, you know, for the economy?
Yeah, it's not that difficult. Because like we say about Nigeria, the things to do are simple and commonsensical. But oftentimes we don't do them. And then we begin to ask ourselves, why are we not doing this? Now, one of the things that I proposed to the government, I think about June last year, was that we could use the opportunity of our response to COVID-19 to intervene creatively and encourage tax compliance. And I said it can be done this way. Look into your records, companies that pay tax, at least as at that point in time we had data for 2018. I said, look at those companies, look at individuals, and give them a 5% rebate on the tax they paid in 2018, credit to their accounts. Now, at that instance, what comes to the psyche of the individual is that you mean government can give me some money back because I complied 2 years ago.
All right, Dr. Adedipe. I think we still have more to get out from you there. Talking about the exchange rate, talking about the inflation rate, these are the economic indicators on focus.
Yes.
So we crave your indulgence. We'll have to get that. And of course, what should we now expect? Should we be optimistic? Should we be pessimistic? Or should we be realistic? We'll talk about that. We'll take a break now, and we'll continue that conversation after the break. Still looking at the state of Nigerian economy, and we still have here Dr. Biodun Adedipe. Thank you very much, Dr. Adedipe. Well, before we went on that short break, I was talking about some of the economic indicators that we track, the inflation numbers, the exchange rate. In fact, there has been some ambiguity about Nigerian exchange rate management, and recently we have seen oil price spike as high as 100% from where it was coming from in 2020. And one would wonder why the Naira is being battered at this time when we still have the oil price as high as it is. You know, so what's your view about exchange rate flexibility and managed floating?
All right, thank you so very much for that. Now, that brings us in context of managing the exchange value of the currency. And there are many issues that surround that. Now, there are about 12 of them that we watch to determine whether what we should expect is for the currency to gain value or to lose value. But fundamental and all that is the interplay between the demand and supply for it, which we often interpret also as this. The demand for foreign currency is derived, which means there is, excuse me, a need for something that requires you to get foreign currencies to pay for. So, and the question would be, what do we need foreign currencies to pay for? What do we import? And that takes you to our trade data. Okay, trade data is not looking well at all. The last 5 quarters in Nigeria, we have had trade deficits. Okay, that's merchandise trade deficit. Now, what that means is that we have been importing more than we're exporting. All right? But again, as at the 4th quarter of 2020, we had the highest historical figure of imports, close to 2 trillion naira in a month. 2 trillion naira in a month, because it's about 5.9 trillion naira in the quarter, all right? So the question now is, what are we importing? If you distill the data, you find that machinery and transport equipment accounted for close to 40%, which is somewhat positive. Because if you look at that, it means it goes in two ways, either into manufacturing or into road and rail transportation. That's understandable. It assures you a better future in terms of infrastructure and in terms of what is happening in the manufacturing sector. You made reference to the PMI earlier on. What is Manager's Index? Now, I have no problem with that, and you know why? Because it's above 50%. The interpretation anywhere in the world is that if PMI is above 50,
absolutely,
your manufacturing sector is expanding. So even if it came down from 53 to 51 point something, it is still good news. Manufacturing is expanding, which is good for us going forward. Now, agriculture is also there. You find that the increase in importation of agri products actually went up significantly in the fourth quarter of 2020. So what that then means is that we are needing more foreign currencies to import things ordinarily that we should be producing locally here. All right? So that will bring pressure on the exchange value of your currency. But I'm not bothered so much about that. And you know why? If you look at our external reserves, yes, it's been hovering around 35, 36 billion, $34 billion. How many months of our import bill can that pay? That's what you always consider. If it's above 6 months of your import bills, there's some measure of comfort. So if I were the CBN governor, therefore, I won't worry my head about that. People often bring into that conversation, oh, we are owing so much, we have to do external debt servicing. There's no country in the world except Nigeria that did that in 2007. Go and check the history. That ever paid its external debt all at once. It's not done anywhere, okay? So if that is the case, bringing that into the conversation is, in economic language, let me go academic now, we call it dubious argument, you know, in the academic language, all right? So for me, therefore, looking at the exchange value of the naira, I wouldn't worry my head about that. Now, what central bank governor possibly will have to worry about is if the rate at the investor-exporter window now moves so far away from the official rate. That's when they should be worried. But that platform was created to measure the pulse of the FX market. So, but oftentimes, unfortunately, we interpret the exchange value of the naira by what we see on the roadside, which is what they commonly call the parallel market.
Well,
all right?
the central bank governor has always said that is not the determinant.
Precisely. I agree with him.
Exchange rate.
I agree with him on that. Okay?
But that is where a lot of people go to anyway, if they have to have access to the exchange rate.
Well, unfortunately, again, if you look at that sector, we ask the question about volume. What volume actually is driven in that segment of the market? So volume is the issue when it comes to FX. It's not so much as the rate. But when you go to parallel market, everybody knows that it's because you have no access to official window.
That's why you
don't have access to I and E window. That's why you are here. So normally I will price higher than those two segments.
We really don't have
just before we go.
Yes.
I mean, the naira to dollar policy,
right.
has it made any impact in
For me, two things.
Yeah.
One is the window is open for only 2 months. Okay, so I don't see any much value in that on the one hand. Then also look at how much is actually coming through that. Just some few millions, okay, of dollars. That is insignificant compared to what we need to drive our external sector. So for me, we should look at that again.
All right. So what should be the major takeaway now? I mean, looking ahead, I talked about the fact if we should be optimistic, if we should be realistic, if we should be pessimistic.
Well, I will say you've had the wrong person in that question. You know why? Because I'm an incurable optimist as far as Nigeria is concerned.
Oh, wow.
And that is my view about the Nigerian economy. So when, therefore, I interpret data and things happening here, is also why oftentimes I am different. And why is that so? Economics is about the data you are looking at, and now you are interpreting it. So both of us can look at the Nigerian economy. I see some things different than what you are looking at. And I therefore interpret it differently. And form my opinion that I say Nigerian economy that will likely grow this year by about 2.54%. That's my projection for the year. So that is way, way above what the World Bank and IMF are projecting. We did the same thing last year. They got it wrong. And we got it right. Okay? And that was not the first time. So, but my view as an optimistic Nigerian and understanding what happens here locally is that this economy will do about 2.54% this year.
I guess you are taking into consideration the informal sector, which the World
By all
Bank
means,
doesn't see.
Well,
take into account.
let me share that same optimism, with you, Dr. Adedipe. Thank you very much. We do appreciate it.
Yeah, we appreciate your
It's
presence.
my pleasure, and thank you for having me.
You're welcome.